There are so many things going on with the Trump administration, like executive orders, tariffs, interest rate, tax cut, a possible tech bubble burst, fears of inflation and maybe recession settling in, and overall a very shaky stock market. That's why in today's video, I want to help you navigate this very volatile and confusing environment by looking at 5 very promising sectors to invest in to ride this year and the years to come. And it doesn't matter where you're located, maybe it's the US, Japan like me, or anywhere else in the world. We are all concerned. And for each of them, we're gonna talk about why they matter, and we're gonna find ways to invest in them with Japanese yen or US dollars. Interested? Let's get started with sector number 1, which is utility and energy. Traditionally, this sector does better than others, especially when the overall economic growth slows down or when there is uncertainty, which is exactly where we are now. First, we all need gas and electricity, so this is not such a surprise, and we'll certainly reduce other expenses before stopping to pay our bills. Who wants to be without gas, water and electricity? But there is more. The development of AI solution is a big boost for energy producers because there is a massive demand for power. For example, an AI search supposedly requires 10 times more the amount of power compared to a regular Google search. We will also see more electric cars being sold, maybe more drones, electric plane in the future, what do I know? And developing economies are catching up and electrifying more and more. Actually, 85% of the global growth in demand will come from them. This explains partially why the growth in power consumption globally is expected to be 3.9% a year for the next 3 years, with China, the USA and India leading the way. And although Japan's energy consumption is supposed to go down until 2030, it plans to shift 40 to 50% of its overall production towards renewable energy. So massive investment and changes on the horizon. Overall, it means more power generation like nuclear, which is maybe traditional or micro generation, renewable like wind and solar, some fossil fuel of course, and more fuel for it, uranium for nuclear power plant, fossil fuel, and maybe technology for renewable, and electric lines to bring it to the consumers, as well as batteries for storage. And for Japan, we should add that it remains highly strategic because the country still imports 97% of its oil and is the largest liquefied natural gas importer globally. So it's not something we should take lightly. And although this sector is very sensitive to any rise in interest rate because of the level of debt and to any change in regulation, there seems to be a lot of positives on the horizon. So to invest in this sector with Japanese yen, you can look at the next fund topic 17 electric power and gas ETF, the next fund topics energy resources ETF, the Global X Japan New Growth ETF, the Global X Cleantech Japan ETF, and the Global X Uranium ETF. And if you have US dollars to invest, you can look at the X Trackers MSCI World Energy UCITS ETF, the Energy Select Sector SPDR ETF, or the Vanguard Energy ETF. As you can see, there are plenty of choices. If you like what you have seen so far, please give this video a like. This will make a huge difference to us and make this video available to many more people. Thank you very much. Let's go to number 2, which is the financial sector. This sector includes mainly banks, but also stockbrokers and insurance companies. With the end of the zero interest rate era in most of the part of the world and actually increase in interest rate, and that includes Japan, banks should see their profits continue to grow. There are also talks of more infrastructure spend, defense spending, and deregulation. This will benefit the financial sector overall, and they'll be there to finance everything and benefit from their regulation. And the banking sector in Japan specifically is very large, with massive companies that have already benefited from regulatory changes and macroeconomic changes. 2 caveats here actually. One is that insurance companies might suffer with increased risk around natural disasters to more instances of extreme weather, and that's everywhere in the world. So insurance might not be the best bet. The second one is that banks and insurance companies are dependent on interest rate, obviously, and monetary policies, which are very frequent and may cause temporary issues, especially in the US, EU, and probably Japan. However, it remains a sector that is quite interesting to invest in the long term, and there are few options to invest in this sector if you have Japanese yen. We can start by looking at the topic 17 Banks ETF, the topic 17 Financial X-Bank ETF, Global X Japan FinTech ETF, and Global X Japan Bank High Dividend ETF. If you have US dollars, you can have a look at the Invesco S&P 500 Equal Weight Financial ETF, the Financial Select Sector SPDR ETF, or the SPDR S&P Capital Markets ETF. And that brings us to the third sector, which is health. It does well even in a slow growth environment because, like for utilities, what it provides, medicine and services, is always needed. More so with an aging population in Japan and many Western countries. Institutional investors like banks and hedge funds and pension funds also tend to like its relative stability and long-term predictability. The Japanese pharmaceutical market itself has a 5% share of the global market. It's one of the largest in the world, representing $95.8 billion, and its companies are amongst the largest, with 6 of them in the top 50, like Daiichi Sankyo, Chugai Pharmaceutical, Takeda Pharmaceutical, Astellas Pharma, Otsuka Holdings, and Eisai. On the flip side, its fundamentals are weak, with very high upfront investment that may not pay back because they need to invest in R&D, and maybe their products are gonna be accepted and authorized or not. They have very high multiples, and changing regulatory environments and the spread of generic medicine will affect their results long term. Nevertheless, it's still a pretty solid bet. If you're investing in Japanese yen, you can try the next fund topic 17 Pharmaceutical ETF and the Global X Japan Bio and MedTech ETF. If you have US dollars, you have a few more choices like the iShares Global Healthcare ETF, the Vanguard Healthcare ETF, and the Healthcare Select Sector SPDR ETF. This brings us already to sector number 4, the defense industry. I know this is highly controversial and you may not like it, so feel free to skip to the next section with the timing down below. But you can also hear me out. The world is rearming at a very fast pace for very many reasons, and global defense budgets are going up to the tune of $2.46 trillion in 2024, an increase of 7.4% in 1 year. NATO countries are finally putting more money in to hit their 2% target GDP, though some like Estonia and Lithuania are aiming at 5%, as the US administration suggested. More realistically, we might see many more countries arriving around 3% of their GDP towards defense spending, and that will be a massive boost economically and to the sector of the defense industry. And Japan is not far behind. It has announced the largest budget increase back last year and even the year before, reaching $53 billion, and will continue ramping up in the coming years, increasing by another 9.4% from this April, so it's already this fiscal year. It's a bit normal because its geopolitical environment is very uncertain, and it needs to start standing on its own feet as the US is rethinking its global commitments, as we have seen. And the Japanese industries have been committed to defense for some time, whether on their own or in partnership with US companies for everything from missiles to warships to tanks or jet fighters. And many top companies are involved in the industry like Kawasaki Heavy Industry, Mitsubishi Heavy Industry, Shinmewa Industry, Japan Steel, Komatsu, or even Toshiba. It's very difficult though to find a specific ETF to target the defense industry itself in Japan, but these companies are big enough to be well represented in some indexes and funds. So, for Japanese yen-dominated investments, you can look at these funds, like the next funds topic 17 Machinery ETF, and a few of those funds. And if you have US dollars to invest, you can actually also find some Japanese companies there. Look at Global X Defense Tech ETF, JP Morgan Beta Builders Japan ETF, the Van Eck Defense UCITS ETF A, Haynet Future of Defense UCITS ETF, and iShare Global Aerospace and Defense ETF. And that brings us to the last sector, which is software and cybersecurity. The total amount lost to cybersecurity in 2024 was estimated to be $9.5 billion. Not surprising, as more and more of our industry and services shift offline, so do the threats related to them. It's not just the scams for individuals coming from phishing attack or data breaches, though there are many, or the ransomware for some key companies. No one is immune, and many hospitals and utilities have been hit by cyber attacks, and election interferences have been noted in the US and across the EU. And it's actually quite scary because it goes beyond money and actually put people's life in the balance by hitting essential services like hospital and through identity theft, where you can basically lose everything and get in a lot of trouble. And actually, some come from criminal gangs, which we can imagine, but more and more from government-backed groups. So it's really states against states, and some individuals are actually targeted by some state actors. With more and more cloud expansion, AI that's absolutely everywhere, and soon quantum computing being able to prevent, detect, and repel attacks is essential for individuals, companies, and states alike. And it won't slow down anytime soon. Some analysts are looking at double-digit growth for this sector. And there are many companies, too many to count. So focusing on funds and ETF is a smart way to invest in the cybersecurity sector. So if you are Japanese yen to invest, you can look at the next fund topic 17 IT and services, others ETF, the Global X Digital Innovation Japan ETF, or the asset management one, Global Security Equity Fund. And if you have US dollars to invest, you can look at the Global X Cybersecurity ETF with a very interesting ticker, BUG. X-Tracker Cybersecurity Select Equity ETF, another interesting tracker, PSWD, so password I guess, and the Wisdom Tree Cybersecurity Fund. And here you are, the 5 sectors that may be worth watching as an investor to ride this very bumpy 2025 and beyond. Please let me know in the comments down below if you're feeling the same way about these sectors. If you enjoyed this video or learned something, please consider giving it a like and subscribing if you haven't done it already. And if you want to learn more about personal finance and Japan, please check these videos as well. Thank you again for watching, and until next time, goodbye.